And it's time to go around the world of business again. It's 1 p.m. Welcome to Business Incorporated. 55 minutes around the world of business. Here's what's coming your way on the program today. We have a firming naira and soaring inflation. What does this mean for Nigerians? And in Egypt, the central bank has increased withdrawal limits for ATM usage. And then former president of Nigeria, Olusegun Obasanjo, is encouraging intra-Africa trade. Find out the details on the program. Good afternoon, I'm Ini John McQuarrie. We delve right into the program with oil prices. It's lower on Tuesday as easing concern about supply risks and a rapidly escalating conflict after Iran's weekend attack on Israel offset data showing that China's economy grew faster than expected in the first quarter of this year. Also weighing is that stronger than expected U.S. retail sales for March that further reinforce expectations that the United States Federal Reserve is unlikely to rush into cutting interest rates, a scenario that dampens the prospect for oil demand. Brent futures for June delivery fell 26 cents, that's about 0.3%, to $89.84 a barrel, while U.S. crude for May slipped 20 cents, that's about 0.2%, to $85.21. Prices fell on Monday after Iran's attack on Israel proved to be less damaging than anticipated, easing concerns of a quickly intensifying conflict that could disrupt supply. Iran produces more than 3 million barrels a day of crude as a major producer within the Organization of Petroleum Exporting Countries, and that's OPEC. And now talking about crude there and what's going on around the price, let's find out how this affects Nigeria. As we know, of course, Nigeria is a major oil producer on the continent and also a member of OPEC. So let's have this conversation with Victoria Momo. Victoria Momo is an analyst with Financial Derivatives Company and tells us how this is going to affect us one way or the other. How, Victoria? Good afternoon.
Hello, Ini. Good afternoon. Thank you for having me.
Good to have you. So we've seen a lot of movement with Brent crude prices. We saw it do 90 and now it's tapered again to 89. Obviously, the higher the price, then since we are importing refined products, then the higher we have to pay. And unfortunately, we've seen our crude production reduce. So how do we balance all of this in the macroeconomics of today in Nigeria?
Thank you so much for having me, Ini. So I'll start by saying that, supply disruptions from the Middle East tensions, OPEC extension of oil production cuts has actually driven oil prices towards that $90 per barrel. But we've seen a sort of reduction in the prices to $89 per barrel, like you said, and this is actually attributable to concerns about demand that is actually weighing on the supply of oil in the market. In the US, for example, actually witnessed a sharper than expected inflation increase in March. It rose to 3.5%, and that's actually has kind of diverted the U.S. Fed attention on, cutting rates. So we expect a higher rate, for a longer period of time, right? Considering that inflation is still elevated. And then for China, which recorded a faster than expected, expansion in their economy, is actually very good. But there are also demand concerns from that country because the data that was released with the GDP figures actually revealed that demand is likely to stay weak in the near term. I mean, the property investment data, retail sales, and even the industrial output data, showed that demand would remain weak, right? So we have these demand concerns that are offsetting the supply concerns, and this is expected to keep prices of oil stable. And although the prices are still, quite elevated, higher prices is actually good for Nigeria's foreign exchange earnings, considering the fact that oil is the major export commodity for Nigeria, right? But we've seen a case of a twist in this impact of higher oil prices, because there is different impact of higher oil prices in Nigeria economy. For example, I said in the case of foreign exchange earnings, it increases foreign exchange earnings. It also increases the domestic prices of petroleum products like the diesel and PMS, right? But in the case of Nigeria, there is a twist, because the PMS prices, domestic price of PMS, is actually capped at a particular price, an average of 630 naira per liter. So that implies that the federal government is actually, making some payments, and that is subsidy payment. So there is an increase in subsidy payments to make up for that cap on the petroleum prices. And that subsidy payment is feeding into the federal government revenue. So it's a case of damned if you do or damned if you don't, right? So higher oil prices also increases the price of diesel, which is inflationary, and also impacts the federal government's revenue and, budget execution and implementation. So there is a cycle. And
Let
we
me
call
just
it
come in there where you're talking about diesel, Victoria, because we know that Dangote has recently started supplying the domestic market with diesel, registered marketers, and then they put the price at 1,225. And well, we're hearing there's the possibility of petrol, even though we did hear that he would do diesel and then do jet fuel before petrol. Perhaps petrol could start later on this year, maybe middle of the year or something. How does that fit into the scenario you painted?
So the thing is, the long-awaited Dangote refinery has, come on stream, and production has commenced, and also distribution has commenced, right? And it is believed that once Dangote, begin production, I mean, prices would actually reduce and all. But what people fail to understand here is that the price determination of this petroleum product is actually dependent on some factors like the exchange rates, as well as the global price of crude, right? Because Dangote imports this crude to refine here in Nigeria, right? And the international price actually determines the trend that the domestic price is going to take. For example, if the international price of crude increases, it means more cost of importation for Dangote, and that could filter into the domestic price of the petroleum products, right? In terms of the exchange rates, if the exchange rate depreciates, right, the naira price for the dollar purchased commodity would actually increase, right? And that could increase the cost that is involved in getting this product. Even if we have like a stable global price of the commodity, the fact that the naira depreciates, it would also affect the cost of importing that commodity into the country. And then this could filter into the domestic price of the commodity. So in short, the exchange rates direction, as well as the global oil price direction, actually influences the domestic prices of the commodity.
All right, Victoria, thank you so much for that. We certainly are looking forward to brighter days ahead in the petroleum sector, supply and pricing, obviously. Victoria Momo is an analyst with Financial Derivatives Company.
Thank you for having me.
All right, now let's talk about another very hot issue in Nigeria. It's the naira. It never got hotter. At this time, we've been seeing a continuous appreciation of the naira to the joy of a lot of well-meaning Nigerians. So we saw it at 1,000, about 1,800. I think at the close of trade yesterday. This morning, I've spoken to some of the BDCs, and they said even in some parts you could get under 1,000. That sounds like good news But I'm still rooting for 700, 700 to see how that will affect all of this, including the issue of petrol pricing and subsidy payment and all of that, So we are looking forward to that as the naira continues to gain. But on the other hand, if you go to the social media, there seems to be a bit of confusion that if the naira is appreciating this much, then why is inflation still, rising? What's going on with that? We're supposed to have that conversation on the program. I know that Ladi did touch on it in the morning during business morning, to find out why that's going on. But if you just stick around with us here on business channels, television, and business programs especially, you will find out how come there's a firming naira on the one hand, and on the other hand, there's a surging inflation. Sounds like two contradictions right there. But let's see if we have the president of Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe, supposed to join us virtually from Abuja. Mr. Gwadabe, good afternoon. Good afternoon, Mr. Gwadabe. Can you hear me? Looks like we're having some network issue with Mr. Gwadabe. But let's take a break now. When we come back, we'll see if we can get him. And we do have a whole lot more waiting for you. Don't forget, our correspondents are still in Washington, D.C., covering the IMF World Bank spring meetings. And guess what? Those institutions are about 80 years. So a whole lot to discuss. Do join us again.
$34 million hectares of arable land.
Welcome back. Still watching Business Incorporated right here on Channels Television. Let's head to the markets now and see what's going on at intraday. And then, of course, we move to other parts of the program. Unfortunately, Aneti Edits isn't here, so as usual. So we see that the NGX is going down further. We're not over this yet. We see it drop to 101. We had 102 yesterday, but it dropped to 101. I think at the close of trade, it was also 101, 101,561.69, down 0.21%. This is intraday. South Africa is also in the red, even, worse than what Nigeria is having, 1.86%. And it seems they've long lost that 70,000 level that used to be like a stable point for them, 67,075.88. We see other African markets right there. We can see the other African markets. Okay, doesn't look like I can have that. So now we do have a conversation with Aruna Kabira. He's the Managing Director and Chief Executive Officer of Global View Capital Limited. He's obviously going to tell us what's going on at the market right now. If we can explain what's going on with the red. I think the fixed income market seems to be getting more of the attention now with the rates being hiked, to attract investors, mop up funds or liquidity in the economy. It seems like perhaps that is what is taking off the shine from the NGX, but I don't know for sure. But let's have Aruna Kabira, the Managing Director and Chief Executive of Global View Capital Limited. Hi, Mr. Kabira, good afternoon.
Good afternoon, madam.
So I'm just trying to understand, is it the hike in the rates in the fixed income market that is robbing the NGX of its shine?
It's one of it, but I also believe that is the revaluation of the naira. And we know what inflation was and what the CBN is trying to do to make sure that inflation is stemmed by increasing rate, and by that implication, the money market is returning. There was an auction for T-bills last Friday, and there was auction for bonds yesterday. They all stopped at 20%. And if you buy, let me say, a Zenith Bank at 2 naira 70 kobo for 41 naira stock, you are not likely to get 20%. So there is this movement. We know that the money that is available, circular flow of income, the money move from capital market to money market to capital market. I think that is one of the reasons why we see bloodbath on the floor of the Nigeria Stock Exchange today.
So is there any hope of a recovery for the NGX if I know I mean, there's also the perspective that it doesn't look like the government will continue hiking rates because that's more spending for the government. So perhaps at some point we'll see the movement back to the NGX.
There is definitely, because while you see people are moving from the market to especially to bonds, because taking a position in bond for like 10 years, the 2034 bond for 10 years, because it is believed by the investor that this will not continue even till the year end. This might not continue in 2025 because there's definitely going to be a drop in the rate. Peradventure, by the decline in the value of the dollar against the naira, comes below 1,000, it comes below 800, and the people believe that yes, it's sustainable, and the prices of goods begin to decline. That is going to tamper with the inflation figure. And the moment the CBN discovered that the inflation figure is also coming down, then they will adjust the MPR, and by that adjustment, it will affect the money market. So as at that time, there will be also the movement back into the capital market the way there's movement out.
Looking forward to those days, missing the NGX with all the bubbly activities we'll normally have there, especially the banking sector. But thank you so much, Mr. Kabira, for your time this afternoon.
Thank you for having me.
All right, now let's go all the way to Washington, D.C. Do remember we have our correspondents there, Juliana Olayinka and Sarah Chimugo. They've been there for a couple of days. We had Juliana yesterday, had a report from Sarah. They've been really busy right there, keeping us up to date on the meetings going on in Washington, D.C. But now we have, joining us from there, the Minister of Finance, Nigeria's Minister of Finance. And I must say, he is speaking for African ministers at this time. He was given that position, leading them at the last meeting in Marrakesh, Morocco. So good afternoon, Minister, Mr. Wale Adun. Thank you for your time. I know it's morning there at this time. How has it been?
Thank you very much. And as you say, it is morning here, but good afternoon to you all. We're here in Washington, the President's economic team, myself, the Governor of Central Bank, and senior finance and economic officials. And we're here to we are going to start today, it's going to kick off today, the annual spring meetings of the World Bank IMF group. And of course, it's a gathering of the international elite, the international financial elite. We have the multilateral development institutions, World Bank, IMF, but also the bilaterals, the UK, the US, Germany, Europe. We have all those around the table discussing issues of, together with, of course, the developing countries. And on the agenda is development, is climate change, how to end extreme poverty, and of course, how to garner the resources internationally in order to achieve those goals. But secondly, and perhaps most importantly, the economic team of President Bola Ahmed Tinubu is here to showcase the progress so far of his bold, courageous, and strategic reforms of the Nigerian economy in order to get it stabilized and get investment in to get it growing again. So, of course, we are here to emphasize what has been done so far. We've all seen what has happened in terms of stabilizing the exchange rate, and inflation, though it's still ticking up, is headed in the right direction. If you look closely at the numbers that came out yesterday, you'll see that there is a slowing of the rate of increase of food inflation. So things are moving in the right direction. Government revenues are up, even oil revenues are up, though not as much as we would like. So we're here really to present what the president has done so far and give an indication of what is to come. And I think also to give a sense of the optimism that is really the mood in Nigeria right now. Thank you.
Yes, sir. So obviously the administration of President Bola Tinubu has been receiving a lot of accolades from IMF and World Bank, as you have noted, in the direction. But what's next as you go there? You go there to present, okay, some of the fruits of the reforms. Of course, we are still expecting more as Nigerians. We still need a whole lot more. But what's next? What do you hope to come back home with as you begin conversations?
Thank you. Certainly, what is next is what matters most, and there's still a long way to go. We have seen some good signs of recovery, good signs that we're going in the right direction, but there is much more is needed before we get to achieving the real goal of Mr. President, which is growing the economy and reducing poverty. And for that, we need resources. We're here to sit around the table with financiers, multilaterals that have cheap financing, grant financing, even bilaterals, as well as to encourage investors. The important thing about these conversations here is that the world is watching, and a lot of investors, they take their cue from the kind of reactions and statements that come out from these types of gatherings. So as you've noticed, there have been very, very positive statements made about the progress that has been made, given the types of policies that have been implemented so far to come and invest in Nigeria. And we always emphasize the interest is in domestic investment, domestic Nigerians investing in the Nigerian economy, as well as, of course, foreigners who want to invest and add value are welcome.
So you also speak for Africa, Minister, because in the last IMF World Bank meeting, you were made heading the African ministers, finance ministers. So what is the agenda for Africa? I know the issue of debt and debt servicing was heavy, very heavy at that meeting, the last meeting. What is the agenda of the ministers of on the continent for this meeting?
Essentially, what Africa wants, particularly from the multilateral institutions, is what I would call a better deal, lower financing charges, more resources. For instance, when you look at climate change, when you look at global warming, Africa accounts for maybe 3% or less of the world's global warming, yet Africa suffers from the effects of climate change much more disproportionately, and therefore it is looking for much more help in that direction, much more technical, much more resources being provided, and essentially at the end of the day, much more help for the smaller countries, the coastal countries that are suffering so much from flooding and other effects of climate change. So really, Africa is here for a better deal from the world economy and from the managers of the world economy.
All right, Minister Waledu, thank you so much for your time. And we do wish you a successful deliberation right there. And I hope when you're coming back with a lot of promises that will be fulfilled, financial promises that will be fulfilled. But do take care right there.
Thank you for having me.
All right, so it's going to be a full package as conversations begin at the spring meetings in Washington, D.C. We do have, of course, our correspondents who are keeping us up to date and arranging interviews such as the ones you have seen right now. But now let's take a break on Business Incorporated. When we come back on the other side, talking about intra-African trade, which the minister talked about. Former President Obasanjo asked for that. We'll get details and more on the other side of the show. welcome back to Watching Business Incorporated right here on Channels Television. Let's see if we can have that naira conversation with the President, Association of Bureau de Change Operators of Nigeria, Mr. Aminu Gwadabe. Mr. Gwadabe, can you hear me? Good afternoon. Hello, Mr. Gwadabe. Good afternoon.
Good afternoon. Can you hear me?
I can hear you now. I hope it stays that way. So let me just start by asking, how much is the naira trading for now against the dollar?
Our quote rate, we buy at 980 and we sell at 1,020.
Okay, so you buy at 980 and sell at 120. Okay. So who would you say is responsible for this continuous appreciation of the naira from your perspective?
Well, it's a long journey, you know. It did not start today. There are many factors that combination of those factors that really helped in achieving this fiat, even though it happened faster than expected. So I want to congratulate the management of the central bank for the first time in history over the past 15 years. We have never seen where even the open market is lower than the CBN rate. So kudos to central bank and congratulations, Nigerians. There is calmness now. We have not been seeing speculation coming into the market, which hitherto has been one of the albatross that is keeping the naira under pressure. This, what you are seeing now, is to show what happened before has no any economic fundamentals. It's just a bubble, and the bubble have busted. So, and this happened with some stringent, concerted policies, stress test policies that started from the unification of the market. It came with a mixture of feelings, a lot of disequilibrium. However, it has finally achieved its objective of convergence. All is to converge the exchange rate so that we can have a single market rate. So congratulations to the presidency also by achieving this fiat of convergence. This is a journey of from 1986 when we created, introduced structural adjustment program. We have had whole Dutch auction system. We have had retail Dutch auction system. Many policies.
All right. All right.
This is
so
why
looks like we have
travelers
to give
now
up.
have relief of traveling. So many factors have come together, the CBN policies, the regulators, and the operators.
All right, Mr. Gwadabe, let me just risk and ask a second question. Do you see this as being sustainable?
Back, and it has helped. The recent policy that allowing FCY account or domiciliary deposit as long collateral, it made a lot of people to be dumping dollar. Of course, the achievement of Dangote now too, I think, is also a very important factor. The pressure of dollar demand from oil companies have now disappearing. So a lot of policies that are putting in place are working effectively.
All right, Mr. Gwadabe, is this sustainable? Do you see this appreciation as sustainable?
Honestly speaking, I am sure the government, the central bank have their target. I'm not a regulator. I'm not the Minister of Finance. So I will not give a target of what they are looking at, but I'm sure they have a target and they are ready to achieve it. Yes, keeping it continuous is also a political will. And I think the presidency have the political will to ensure that that target, in fact, they already have a budgeted figure of what it's going to be. So people can work around that, and I'm sure that's where also the government is working around. There is a lot of confidence back. I heard you when you are talking about the fixed market, how investors are getting confidence. We have seen how central bank treasury bills have been oversubscribed. And then we have seen how they have also corrected the flows of diaspora remittances. Now they are having a chunk of diaspora remittances coming in because of so many policies of the central bank that try to calibrate how the inflows should be coming in, even though there's a lot of gap that is not coming, that's still externalized in the diaspora window. So first is for the CBN. I'm happy the new guideline of the central bank for BDC operations in Nigeria did recognize the real change as agent of IMTSO. That will bring in over $15-20 billion annually, because there are a lot of IMTOs over there that don't have the last mile. And lack of having that last mile, I mean, somebody to do their transaction here, to terminate the transaction here now. So having BDCs that can now be terminating as their last mile agent, in fact, will generate nothing less than $10-15 billion annually. Then two, the government should, the government should also de-risk export. The contribution of our non-oil export is not more than 4% to our GDP. So we lack standard, we lack quality, and this is a hanging fruit too. We need to have a paradigm shift from depending only on 80% oil. In pre-independence, most of the projects done in Nigeria are done with the profit of agri-profit. So we should begin to think on how do we go back to our pre-colonial areas so that we can diversify our income. I heard the Minister of Finance talking about revenues increasing. Alhamdulillah, revenues are increasing. Also, the crude oil production is increasing. The last I read is from 1.3 million barrels per day to 1.6 million barrels per day. So investors are also coming in there because there is also that of investment in even the oil industry. So we need bigger investment, complex investment that will come into that sector to harness the potential resources, huge resources.
All right, Mr. Gwadabe, well, those oil production numbers, you call those things that are not as though they were.
We should use this opportunity.
All right, thank you.
Okay, we should look at empowerment. Our youth should be empowered. We can even start exporting human beings, skill, brains. We have a lot of them. We have art, we have music, we have IT. So, for instance, Bangladesh now, they export their people to Saudi Arabia. They do most of the job in Saudi Arabia. If you see the huge remittance, personal home remittances that Bangladesh are sending from Saudi, you can't believe it. We have Nigerians already, there is what is called Japa. Let us formalize Japa with skills and specification and standardization. That will also help the youth. It will also help the country in terms of foreign reserve. So these are some of the things that I believe the government can put in place and help and sustain the achievements so far.
All right, Mr. Aminu Gwadabe, President, Association of Bureau de Change Operators of Nigeria. Thank you so much for sharing your perspective with us. Thank you so much, Mr. Gwadabe. All right, thank you for your efforts. Thank you. Yeah. All right, so let's move to other stories now. The African Export-Import Bank, in collaboration with the African Union and AFTA Secretariat, as well as the government of the Peoples of Democratic Republic of Algeria, prepare for the 4th edition of the Intra-African Trade Fair, which is set to take place from the 4th to the 10th of September. Former President of Nigeria, Olusegun Obasanjo, who is the chairperson of the IATF 2025 Advisory Council, has extolled the Intra-African Trade Fair as the go-to trade fair for investment on the continent, and is also asking African countries to intentionally create platforms to ease intra-African trades.
Executive Vice President. If you look at the African share of global trade, it is very minimal, at just about 3%. Likewise, the volume of trade among African countries themselves has actually declined in the past 2 years from about 18% now to 14% as at 2022, showing the effect of the pandemic. This does not support the development and socioeconomic condition of the continent. Instead of buying from each other and benefiting from the time-tested positive impact of trade, we are instead trading with others, worsened by the fact that we are exporting our huge resources at very poor value and importing about 86% of what we need, mainly manufactured products at much higher prices, with outsiders benefiting from our own loss. This is a huge opportunity cost to the African continent.
Well, talking about encouraging intra-African activities, trade especially. Now, one of the arms or one of the groups that could do that is the Securities and Exchange Commission. Well, they talk about commodities ecosystem implementation. They do have a committee for that. E-dividend and direct cash settlement, financial literacy, non-interest capital market, financial literacy, technical committee. All of this make up the agenda for their meeting, Securities and Exchange meeting, the first one for the year. So let's talk about some of the things to expect and ask them some questions, especially about one of the burning issues at this moment with the Chief Economist of Securities Exchange Commission, Mr. Oke Omeando, who joins us from our Abuja studio. Good afternoon, Mr. Omeando. Thank you so much for your time.
Thank you, Ini, for having me. It's always good to be on your program.
Thank you so much. So I think one of the hottest stories around the capital market now is the expectation from the recapitalization. We've seen FBN Holding, for instance, have already given us a hint of their plan. And of course, the capital market is going to be very busy. How ready, or what's SEC doing to get the capital market ready to absorb these banks' demands and investors' response to their demands?
Okay, thank you, Ini, for that question and for getting it out at the get-go. The capital market is ready. The capital market is ready for the influx of issuances that will come with the banking recapitalization. If you look at how the market has progressed over the past 5 years, and especially in the past 2 years, you would see that a lot of liquidity has come into our market. Our market today is deeper than it used to be. Our market today is wider, is larger, it's better regulated. And the market is ready for this. We've been preparing for this in terms of the needed infrastructure, technology, the personnel. So everyone is ready. From the point of view of the commission, the regulator, we're already working internally to ensure that we even give a better efficiency than we used to. And we're also engaging all the stakeholders, the capital market operators, the exchanges, to ensure that they too are ready. And I must tell you that this is one of the top issues that will be discussed on Thursday at the CMC meeting. We are going to be asking everyone to be ready. We are going to, sort of remind ourselves what being ready means. And I assure you that when it's time for this fundraising, the market will be ready.
I tell you, I like the sound of when you say what being ready means, because it's one thing to say you're ready, but to actually itemize what being ready is. But I mean, I'll leave that for your meeting. I know you have a lot of conversations. I know another thing you're also going to discuss at a meeting will be the issue of e-dividend and direct cash settlements. These are some of the factors that could encourage or boost the confidence of investors to embrace the opportunities in the capital market.
Yes, e-dividend is a major issue. You know, we have a new e-DMMS portal. It's a new portal we have created that will make it easier for everyone who has unclaimed dividends to claim them. It's easy to access. Just go to the SEC website, sec.gov.ng, click on investor area and point to the area that asks whether you have an unclaimed dividend. Just try and put in your name and the unclaimed dividends will show. And just continue the process. It's now very easy to ask for your BVN, your account number, your name, and things like that, date of birth. And it leads you to how you can get your account mandated to get your dividend. So I'll use this opportunity to call on Nigerians who have dividends, or who think they may have dividends, to just go to our website, the SEC website, sec.gov.ng, and do this search today. You'll be surprised at how much money you have. So, we have sorted out that, and we are hoping to spread this message so that everybody knows that their dividends are there and waiting for them to claim them. Direct cash settlement is still as it was. What we did at the beginning of it was to opt everyone into it, and we also gave the opportunity for those who wanted to opt out to opt out. So that is still ongoing. Investor protection and making sure that the market is fair to all investors is at the, it's a very important mandate of the SEC. So we take it seriously, and every day what we think about is how to improve the investor experience from the A of entering the market to the Z of exiting.
Yeah, I like the part about the entry of the market, because you know that the Gen Zs of today, they are really impatient. And now there's going to be a flurry of opportunities at the stock exchange. It will be very good and beneficial to everyone if entry is made. Sometimes you have to do a whole lot of paperwork, sign this and do this and submit and wait for some days and things like that. I hope the SEC is also looking at how to simplify that process and make it seamless to encourage especially the younger investors.
Yes, INI, no more paperwork, no more forms. It's e-offers. So everything will be done online. You don't need to get any forms like we did in the past 10 years ago or 20 years ago, no. You just get on the portal, fill in your details, make payments and everything. I remember we don't use certificates again. So we have dematerialized. So there's nothing like, after buying, you now wait for months for your certificate to show and things like that. We're also working to ensure that allotment is done very quickly. So that we won't have that situation where investors bought shares and we're waiting for certificates for a long time before being able to trade on those shares. So a lot of the things that happened in the past, during the banking capitalization of recapitalization of 2005, 2004, thereabout, we have improved on all those. So we welcome the Gen Zs. This is an opportunity for them to access the market. We are going to make it friendly. We are going to make it easy for anyone who wants to, be part of this process or this opportunity that is going to come to take part.
So obviously you have your hands full for Thursday, a lot of conversations, and the media will be keeping our ears closed to hear some pronouncements so that we can follow up and, hold you to your words.
Yeah. Yes, Ini, we would want your support. We want you to cover everything we are going to do, starting from the CMC to everything we are going to do in preparation for this recapitalization exercise. I want to assure Nigerians that the market still stands as a viable wealth creator. If you look at the performance of the market over the past few years, you know that the market has really done really well. Equities market, over 46% return last year. This year to date, 36. The bond market is doing well, so you can see yields are, on the high, and a lot of interest. Just before this interview, I saw you interview the Minister of Finance, and he was talking about the same thing. There's investor, investors are now attracted to our market. There's interest, renewed interest in our market. So there's no better time than now to get into the capital market.
All right. Thank you so much for that word of confidence. We'll look forward, of course, to after the meeting, perhaps get a review of it. Thank you so much. Chief Economist of the Securities and Exchange Commission, Mr. Oke Umeanu.
Thank you for having me, Ini.
All right, now let's go to Kenya, yes, and see what's happening there. The Central Bank, Egypt, beg your pardon, not Kenya. The Central Bank of Egypt is set to set an increase to the daily maximum limit for cash withdrawals from ATMs to 30,000 instead of 20,000. In a statement issued, the CBE announced an increase in the daily maximum limit for cash withdrawals from bank branches. And the CBE also obligated banks to review their internal policies to reflect the amended limit while updating the policy of maximum cash withdrawal limit for foreign currencies set by each bank and approved by its board of directors. These orders also refer back to the CBE's instruction issued on August 25th, 2022, regarding the maximum limit for cash withdrawals and deposits, whether from bank branches or ATMs, and comes as part of the central bank's desire to provide further facilitation for citizens and companies. From there, we'll go to the crypto space, where I can tell you it's all shades of red, not friendly at all.
Red on the screen.
All shades of red.
Yeah.
I mean, there's the light red, there's the deep red, there's the medium red, there's the tomato red.
Yeah. You know, some of us are colorblind, but
you can't
I
be
see a lot of red.
You can't be blind to this.
Yeah, you can't be blind to this.
This is
it's
a
really
whole
red.
lot, laddie. What have you done to the market?
And it's quite incredible, you know, when the market is going up, everybody's all excited. But when you have those pullbacks, investors get all weary and all of that.
Yeah, but it's always a time for another investor to hop on.
Exactly. So one investor's red is another investor's green.
Yeah.
You know, at this point. All right, let's check out what's going on now. We see it's fully red, just little pockets of green. Let's look at the top cryptocurrencies we track now. And the sentiment, obviously, in the market is still not extremely greedy, definitely at this point. We see Bitcoin there, $63,625, down 5.52%. From earlier on Business Morning was down about 4%. We've seen more drops at this time. XRP is also down, losing that 60-cent level. They didn't really rally with the rest of the cryptocurrencies that we track at this time. But let's bring in Rume Ofi now, financial market analyst, to bring us up to speed. Great to have you, Rume.
Good afternoon, Adi. Good afternoon.
Yeah, I read on the screen at this time, and I see a big smile on Rume's face because Rume is the bear. I call you the bear on this show.
I'm wearing the green.
But talk to me now, Rume. Everyone's expecting the Bitcoin halving, and investors definitely, if some have taken profit, you know, based on that. But talk to me about the Bitcoin halving. It's we know the rewards miners get for mining a Bitcoin gets halved. So that means not much incentive, you know, to mine Bitcoin going forward. Is there a risk we're going to get some miners just pack up and, you know, stop mining Bitcoin?
Exactly, Laddie. You make my job very easy for me by making some of this last statement. The ASIC miners, a lot of the miners that have actually been using this machine for a while now, most likely are going to most likely change some of these hardwares. And these hardwares are quite expensive, running into tens of thousands, about $60,000 to $80,000. So for them to be able to have more ability to compete effectively, so buying a newer machine and price of Bitcoin is down is more like a loss for you. So it's difficult for these miners to be able to recouple their profit or make money off all of these things. So it's very risky for the miners. So most likely what they are doing now is to sell and hope be on cash. So you won't have to blame them. If the amount of mining one Bitcoin become less or become more expensive than the price at that point in time, it makes no sense to get into the mining business. So we're going to see a situation whereby some miners are going to sell because the machine they have can't meet up to the expectation of solving the competition quite well to be able for them to make money. So this is some of the difficulties that's going to happen. But though the Bitcoin halving has actually priced into the market, I was seeing a couple of things. But if you ask me, things are fairly better because before now we used to see about 30% down the all-time high at that point in time before the halving, but it didn't take place this time. Just some pocket of drop down, which some persons attributes to the geopolitical crisis and some other things, which some of us have been talking about before now. The truth is, at some point when the market goes up, it's only natural that people take profit. It's only someone that doesn't understand the industry or doesn't understand what it means to invest and make money and take profit will leave their money there. Because the truth is, even humans don't live forever. So why get involved in an investment and try to get so emotional about it?
Right. And looking at the market right now, we're seeing Bitcoin down from the previous highs. Is it time to just take profit if you've not taken profit already?
Yeah, so a lot of persons actually got into the market at the highs. Even last week I actually said that this is dangerous. It was looking like I was being too more careful than those that are actually listening to me. Then we saw that flash dump that actually made people, the longs liquidated in 24 hours was $900 million. I think that's one of the biggest liquidation we've had in the history of the entire market. So those that were actually thinking that we're probably going to 100K actually got their hands. But even yesterday or thereabouts, we still have about $330 million liquidated. So it's really tricky right now.
Yeah.
The market is it's much more emotional than we least expected, with all of these uncertainties of whether there's going to be a cut or not going to be a cut this year at the U.S. Central Bank. It's even making it more scary. So people are usually going to take profit. We're probably going to see some more downside, but again, there could be some short-term upside a bit before we go to downside.
All right, looking out for that. We'll keep tracking those prices. Thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you, man.
All right, so there you have it. You have the green days, and now it seems the red days are upon us.
Balance life.
Exactly.
That's just it. But Ladi, I really don't like the uncertainty that comes with this. There's going to be a rate cut in June or no rate cut.
Yeah.
I don't like it.
Maybe we should just forget rate cuts for 2024.
All right, Ladi, thank you. Well, that's it on the program today. Thank you so much for being a part of it. We'll go round it again tomorrow. You don't want to miss it. But you can repeat this experience at any time. Go to our YouTube channel, and then you can see it. I'm Ini John Mekwa.